April preview. Right, let's look at it. Please pay attention, traders. This is what I call the stock fell of Forex trading. Where will the money go for April? This is our estimation, but this estimation doesn't just come. We don't use indicators of currency meter. We don't use indicators of talking about the money flow index. This is not a money flow index. This is an actual analysis based on our correlation and confluence of our strategies. According to me, the pound is definitely gaining momentum with a serious bearish divergence. If the pound does not fall by the end of March, I would rather by the end of April, I would say something is definitely going right in the UK. We must be investigating that thing. It has been going right all along. But I'm expecting some pullback of the pound. I'm expecting also that this time the dollar will weaken. I'm expecting that the Canadian dollar will pull back slightly and continue to rally a little bit. Now the Australian dollar is likely to get a rebound. That consolidation was very long, and it managed to get some form of a support which could take the price up. I know some people are seeing some head and shoulder pattern there, to the downside. You must check where it's gonna go to. The target is not gonna be a good one of that 4-hourly or intraday head and shoulder. Does not look good at all. But I will show to you. There could be a chance that the Australian dollar could be bouncing because of the weak US dollar. So be very careful if you still want to sell your Australian dollars, because the sell has not been a very good trade over the past 2 months, by the way. So be very careful that these brokers and these institutions, these commercial institutions are holding on to the Australian dollar. So there's something definitely that Australia is doing there in terms of consumer and investor confidence. So New Zealand dollar, euro, I'm expecting some inflow, definitely should be bouncing. New Zealand dollar also bouncing. JPY, definitely I'm expecting, definitely should be resuscitated there. The Swiss franc and the Japanese yen will continue to consolidate. If it breaks out, there's going to be new direction in the market. I think we'll be redrawing, we'll be going back to the drawing boards. And then metal and commodities, I'm expecting an inflow there. The pullback is now reached some saturation. And on the crypto world, I'm expecting pullback of cryptocurrencies, especially the top two, Ethereum and Bitcoin. I'm expecting them to really come back. They've consolidated at the top, but it seems like they have found a resistance, which resistance still holding. I don't see any break above that for now, but crypto world is a crypto world, man. You'll never know when Elon Musk or when a Richard Branson or Warren Buffett will come in and buy a single Bitcoin at 60,000 US dollars. I wouldn't do that. Thank you very much. So that's where we are. So for the month of April, we are still targeting well over 1,000 pips. We're targeting over 1,000 pips on only those 3 charts. I'm only bringing 3 charts again today, and they are very heavy. One is going to be on a more intraday basis, and the 2 are going to be more on a swing level. Let's look at that. Let's get to it. Right. The first pair is that I would like us to take this opportunity to enjoy or to do a short of a pound. Yes, I know that the pound has got a rally, but I think that the need for correction has matured, and I will demonstrate that across all pound pairs. The need for pullback is very strong, and you can do that safely. So it's not necessarily a counter trend per se, but it's a very nice resistance level, some supply levels. I think it has come to some nice supply levels there and some resistances, which is backed up by price action. I will go to the chart. We're also going to be shorting UJ, and we're also going to be going long on NASDAQ. That's what I'm 3 charts. You can see that total profit, total target for these charts, if you use the minimum of UJ, is about 3,000 pips. Of course, it may just well settle around 1,000 or 800 pips by the end of the month, because the pound and the Swiss franc are more of a long-term trading, and the NASDAQ is also pretty much of a long-term trading. Those who have been trying to short the indices, it has always been a beta pill to swallow. These markets doesn't want any short sellers of the indices of the US especially. So, but I will tell you why do I like NASDAQ over S&P 500 and some other Dow Jones and others. I like the tech. Right, let's get to that. First thing is that, again, you can see this is the chart that I've put. I'm not going to go to dwell a lot, on I'm not going to dwell a lot on the USD, on the dollar and the ZAR, because I've explained this chart again. Let me get to the market, by the way, that said. So I am going to be taking you to the charts, and then please now check on how we do that. Check how we break it down. For those who are learning how to put up a portfolio, I hope you'll be learning. Remember, we only select only the charts that are maturing, the charts that are ready to mature. We don't go for charts that are going to be on the market watch for the next 2 months. It would not help us. So we are definitely checking the charts that are going to help us now. Let's start with the USDs. I'll come to this chart later. Let me go to my ZAR profile. I do have got profiles for each if I want to. There you see it. So there it is, the USD ZAR. It is back at that support. It's support that you all know. Every single trade. I think even an intermediate trader can tell about this triple bottom. Will this triple bottom go and break the double top? I doubt it will, based on the structure. This structure may not work. This pair could do what the GU did. The pound dollar managed to get a rally from this level and shot up. But I think based on Elliott wave structure, it may just go down to the 1350 levels and found the bottom support. But indeed, it is entering a very serious demand area on the dollar side. That I can tell you. So we're waiting for that area to come. If it breaks this current level, 1350 is the point. But I know many people are calling for a buy. I don't have a problem with that, for as long as the risk is low. But it's not a buy that I could take if I'm looking for a sustainable. If I'm looking for a positional trade, I would not take this buy. I would rather take a buy once we break that double top that you can see. That is just waiting right there. So I wouldn't do that. That's why it's not here. Once it can break this point, I will definitely be able to join in to the upside. There's a lot of money there. But I'm seeing that. I'm seeing this triple top, but this triple top is also at the support. But I think it may do what it did just here previously. So it wants to repeat the same thing. Trap all the buyers there, go slightly up, break down for me to wake the final wave, which is your wave number 5. I'm very much afraid that it may want to come to this point. I've also done some form of an expansion levels, and that expansion is very important for this pair. So I wouldn't want to jump on it on a long. I tried to buy it from this level. It did not break the resistance. I'm not going to try it again. But I think, like I said, I wouldn't blame anybody who wants to go long USD ZAR at all, because as long as for me, they can be able to hold that trade until 1350. Some instances we've got 14. It may bounce on 14. 14 is inside also there, just inside there. It could come, enter that zone and just go up and be kicked out nicely. Price rejection that can take it back to the higher levels. So that's how it is. Just want you to note that. So it's not part of the signal, but I just want you to note that. I also like you to note that not pretty happy with everything there. Let me just clear that. My long-term view of USD ZAR still tells me that I need to be slightly cautious there. I'm looking at this channel. That's exactly where the 14 can be coming from. There's the 14 level that I would be taking. It will still be within that zone. It will still be within that zone if it does 14. If it touches 14 or 1350, it will be touching this key support. For me, that's where I'm interested in. So I'm interested in this level. I'm not interested in this M. Those who I've trained, they know what I'm talking about. I can see it's an M, it's a triple bottom, but I would like to take a further lower price. 14 or 1350 would be my ideal. It will be my ideal buy of the dollar. And I think it can go back to the 20 levels and you can take it from there. So basically, USD ZAR is not on my portfolio for the month of April, but I'm looking on it for the month of, rather for the year of 2021. I don't think that 2021 will go until I take a long USD ZAR back to the 19 to the 20 levels. And if it's possible, even break those levels going to the 25. May not be good for the petrol price. That's why I'm saying that rather keep your account in dollars or in euros and take it from there. So that's how the USD ZAR goes. So that goes with the first charity begins at home. So I'm still bearish. I think the dollar, the rand still have got it still has put the dollar under a very strong pressure, and that pressure could be for the last time. Then from there, the dollar should be taking over. If it can break this channel, I think Ramaphosa would by default here get some compliment and may as well claim the second term as the president of the country if the ANC can just go with him on that level. We don't know. I'm just talking politics. I can't speak about politics. But this chart for me looks still bullish, and I will still go for Joe Biden than for CR17 for 2021. Right, let's get to the market cap. Let's get to the chart. The first chart that I want to break it down for you is the pound and the Swiss franc. Right, let's go to the UK. This is my British pound portfolio, and I have selected only for you a pound Swiss franc. I've selected the pound Swiss franc because it is breaking a small supply there. I thought it would fall from this point. That's what we said last year. It did not respect it. You can see how it's moving slightly up. I think it should be able to make the wedge. I would like you to, I will be monitoring this together. So it should be making some form of a wedge there. This wedge should be touching that resistance, which is also a huge supply. Doesn't look pretty strong, but I would trust it based on correlation. Let me say it again. I would sell around 1.34. This level is a 1.34 level. That is where we are making a call of that's where I'm making a call of a sell around 1.34. I'm going to give you the level exactly. So I would suggest that we take it around 1.34, the exact level around 1.33. Yeah, I think it's exactly 1.34. There it is, right there, 1.340. I would call for a short with a 550 pips stop loss. Please, guys, as I told you, it's not a small trade. 550 stop loss. If you're trading 0.01, that's $55. Trading 0.10 plus minus $550. So if your count does not have just over $100, this might not be a trade for you. So this is from $100 upward. Trading 0.01, you can only take but just one trade. So I'm expecting some form of a wedge there going up, touching this point with divergence of the oscillators. My fibs is perfect on this one. I'm happy with these fibs. I'm trading the 200 there, and that's the 261.8. So this is the double. In fact, that's one equal head. I'm happy with this equal head, by the way. So it touched the equal head, bounced from this point. I'm not going to be doing the head and shoulder pattern. Sorry, guys who are here. I know that most of you could be seeing the head and shoulder pattern. I'm not going to do head and shoulder pattern there. My best level will be this. I think the head and shoulder won't be like an equal shoulder, but I'm expecting some form of a shorter shoulder, right shoulder there, around 1.21. I would even go for a long trade there. As you can see, I would rather have a long trade there. So I'm expecting to be swinging pound Swiss franc for the rest of the year, but ultimately keeping a bullish bias of the pound. I must make sure that I mention that. So basically keeping the bullish bias of the pound. So I'm expecting some form of a pullback there, and I think this pullback is full one. This rally, as I said, it's matured. It is due for correction. And I think even the British will appreciate that their currency has gained, and it could be time to go and look for investors from a lower level from the lower values of their currency. Then I'll buy back around 1.21. So let's leave it there. That's the second signal. Getting short around 1.34, 550 pips stop loss, 1,000 pips will be a take profit. So it's a 1:1. It could be more. So that's how I would leave that. So that's how it is. I have correlated this pair. You can see that I'm using fibs, and I've also I'm using fib expansions at the moment, and I've correlated this pair with the dollar Swiss franc, all right, USD Swiss franc. I've correlated this pair with all other major pound pairs. When I look at this guy is ready to go, but it's a leader. I'm using GBP CAD as the leader. I'm using Euro GBP more to be, there it is. The Euro GBP is bouncing up to show that there should be some form of correction there. But it should definitely, you can see there's a nice candle that Karaba would like. There's a very nice daily candle that is forming right there, showing the weakness of the pound. GBP, JPY, I could have given that as a signal. There it is. You know, I like that one, bouncing exactly from the 161.8 of our fib zone. If you are using, these are not signals, this is what I call correlation. I look at one pair before I can go with the other. Using this pattern, this market is gone there, and then we are expecting some form of a 3 drive pattern there to go up to the to the higher levels. That's a 3 drive there before it can drop. So we are expecting to all get to pull back so that it can have the last wave of the bullish cycle. So it's a wonderful, I'm loving this one. So like I said, the pound, I think everything seems to be on point so far. High probability, I'm expecting a drop. Yes, it is dropping slightly higher. I must mention that point, that the Swiss franc will be using this, the pound Swiss franc will be using this supply, which the British pound Japanese yen broke. So right now, this guy is the leader. He's already reached the top. Okay, and the Swiss franc still have got to come to the top. So I'm expecting that the pound Swiss franc should be bouncing there, then go to the same top that the pound Japanese yen has done. So, but like I said, in this case, in terms of correlation, that the pound Japanese yen is the leader from all the correlation pairs, including GBP CAD. GBP CAD is already bouncing from the support going up. GBP JPY is pulling back to the support, then it will follow the GBP CAD. The pound Swiss franc is going to also go down, then follow the GBP JPY, just like that. You know, I'm not training, I'm just showing you on how we completely make a compact case, you know, in this instance. So in this instance, I would definitely, let me just check again, quickly look at the pound Swiss franc, rather the pound dollar. The pound dollar is also looking pretty much the same. You can see that I'm expecting the bounce right from where the GBP Swiss franc is bouncing from in terms of levels. These are the similar levels. So GJGU, pretty much the same levels bouncing that from. I think these guys can be finding a small pullback. The GU is not going to be going down much more. I'm worried. I don't like this at all. GJ will fall more than GU, you know, pound and the US dollar. Then there is where we're going to be going for the head. Then from there, we're going to be pulling back through a head and shoulder pattern and then continue to the upside. But both of them are preparing for the final rally. All pound pairs are preparing for the final rally. Once they get that rally, it's going to be, they're going to be saying that COVID has ended in the UK. So be there and let's see how it's going to happen. So I'll be monitoring pound pretty much every single month and see whether this reality comes, this analysis comes to reality. That's number one. So that's pretty much done. GBP Swiss franc, 550 pips to give away for 1,000 pips or just above 1,000 pips. We could be seeing an entry and you may not see the 550 pips stop loss at all. You can collect anything if there was no risk. If the price moves exactly from our entry level, there's no risk, then you can start collecting. Then you can start just taking the profits from whatever that your account can take. As I told you, we are not strict in terms of exits, but we are strict in terms of entry. This entry is there and no any other entry. You don't enter now. I can see there's a nice bearish candle forming there, but this could form into some form of a wedge. Wait for this wedge to form. Take the top of the wedge, break to the downside. If it does, great stuff. Then we go into 1.21. When it gets there, we look at the charts, we look at price action. I think I'm going to be going another big long there, 600 pips for stop loss and going for 1,800. So if you can trade this for the next 3 months, you are set for about 3,000 pips on a single pair. Different trades. Done. Let's get to the UJ because I want to entertain your questions. UJ and the profile. I was using this for training, right? If you have attended our Fibonacci expansions course, you can see that UJ on an intraday level, on an intraday basis, I'm deliberately on daily time frame. But if I can put it on H4, we are on what we call an H4 fading levels. So there we are. We are strictly at the fading levels. Unfortunately, guys, we were not there last week. It bounced. My limit order was not fulfilled. I just took it out this morning. So I'm definitely buying around the lowest side because this also could be good. So, but basically, this is what has been killing the guys who have been trying to sell UJ early. No. The momentum was pretty strong. Those who have attended our FIB expansion courses, you will understand that the momentum was very high since this price broke this level, the 161.8 level. As we said, once we break the 161.8 levels and it broke the 261.8 levels, you are joking if you are trying to sell. We don't sell nothing there. We don't sell nothing. So there it is, touching or getting into our fading levels. being kicked out like dogs. There it is. This, I believe that this plummeting will continue as the gold goes up. I'll come to that point. And this is our first target, as I said, 300 pips to start with. This is only a 150 pips, meaning that I'm saying that if this price come back, if you do have got the budget, you can short right now. You will be adding this amount of money to your risk. If you want to short now, we're going to be adding another 120 pips. So it's going to be 120 plus 150 for you. Okay. One is about 200 and something, you know, if you want to ride with it. And then your first target is going to be 300 pips, and your second target is going to be a 500 pips. That's how it's an intraday setup, this one. Anyone who's trading H4, this is what we've made up for you. From H4 to daily, you are most welcome. Because you can see it on daily, it is definitely showing some very nice sign there. Weekly should even be more beautiful. So if you can finish this week with this is already a bearish harami already. All right, if it can finish still going on the other side, you could be seeing a weekly bearish engulf. Most of the people might be joining it next week, and I would have given a signal way before then. If this price on intraday level goes back to the same level, to the fading levels, I will enter it with no blink. Put the stop loss 150 pips. My target is going to be at the 261.8, meaning that around 107.40, and my trade will be around 110, 111. That's how I make my first 200 pips. Then if it can break this, which is highly likely, it will go to the 161.8. This is how we trade fibs. We move from the fading levels of the trend, we go to the full retracement levels. It's going to go to around 161.8, which is 500 pips. I would be happy with it there. I think that this one should be achievable within a 4 weeks period. Remember, we are just on the first week of the month of April, and this is the entry, a matured market on an intraday basis. I would enjoy it. This is a very nice impulse wave. So I would not underestimate the dollar there. They made a very nice impulse there. So they should definitely be pulling back up to this level. They would be pulling back to the higher levels there. We'll be monitoring the price of gold as this does. But I don't think that the price can be able to go any higher than that. And I will show you on how UJ looks like, how on a long-term basis. So that's how it looks like UJ. I don't like it to be a long-term trade. Please, traders, I would not like that you could short, rather you could go long on a long-term trade, because there is the aeroplane that you have seen on Facebook. The aeroplane could even be reaching as far as 112 just to look for people that it can kick them out of the market. Once kicking them out, it's going to be going down back to the 102 levels, so that it can still go down. For me, instead of buying, I would still say it could still go down, not even higher than that point. So be cautious. So we are on a short term, just for the month, we are on a short trade. And then from there, it can still further go down. But I would be cautioning anybody who may want to go on an intraday long position when the price retraces. So that's how I would leave it there. I'm still on a negative. So meaning that for me, the UJ is still negative. Why? Because I'm looking at gold. Gold still looks positive. Gold, it's under pressure, but gold wants to do stories there. The first one that correlates with UJ or with the strength is that you can see that UJ is beginning to find some support. That bounce, I don't buy. Sorry, guys who are there. I want this buy. You know, this is the buy that I would rather go for. So it's not a signal for you. I'm just showing you on how it's gonna go like. That's why I'm saying that there could still be some opportunities somewhere and opportunities. I'm waiting for this price to go in and still make another lower low there, and then should be able, if I can get a buy trade there, I'll be happy, because I'll be buying another lower low there of this channel. Then I break the channel to the upside. So I'm gonna be happy with that. This is what correlates to the fall of the UJ. So the euro is gonna be dropping for the last time, then it's gonna rally, and as the euro rallies, it's gonna be confirming our weakness of the greenback of the US dollar. Once the US dollar weakens, the price of oil may shoot up, but the price of gold, then it's also expected to shoot up, and very nicely. So there you go. You can see that that an order was missed there. You can see that from this, I have been ready with this setup. I'm ready to go long for gold, I'm not joking. I'm looking for that bullish flag to be fulfilled. If the price comes down and fulfill at 1670, I should be able to take an that triple top I can take, because it's on the key support of the channel. And I believe that is the support that can take the price to a new high of the gold price. So these are not signals for now. I've given signals of the short UJ and not of the buy gold. But if this gold can break this price this week, there will not be triple bottom. So unfortunately, I could definitely just be talking to our exclusive traders to say that if this level is broken, the gold is gone. This flag definitely doesn't stand a chance. Breaks, and then from there we could be going to the 2060 levels, back to the 2060 levels. Otherwise, as we have already contemplated, $2,300 for gold. When that happens, it means that UJ will be continuing to go down. That's exactly what I wanted to warn you against. The price of UJ will be continuing to go down. UJ does not look good if it's like that. That's the fading level, but the price should be going down further. So that summarizes UJ. It's just intraday setup. I think you just also keep on enjoying that. We've got 5 minutes, then I'll be taking questions. I don't see any questions coming on chat, so it means that you guys are enjoying the session already and everything looks pretty clear for you guys. So let's do the last chart. If you like indices, you should be very careful. I'm going to be giving you a very nice positive signal. This signal is supported by all forms. Sentiments are positive. Fundamentals are positive. The correlations are looking good. Everything looks right now for indices. The only problem is that the price could be high. I wouldn't want you to be jumping into indices when the price is high. Right. Let's go to the Nasdaq. Right. Nasdaq is under my advanced. Right. There is my Nasdaq. Just on an intraday levels. I think most of you, I don't know if you've seen it. I've been monitoring it. I missed that shoulder. Though I did not like it, I felt it was like highly risky, but right now the risk has been removed from going long on Nasdaq. I'm loving this setup way too much. So I think that there will be those who are investing in the Nasdaq US Tech 100, they will be excited today, I think, as they finish the market. But I think they should be finishing it around back to the resistance, back to the record high. Then they all celebrate. I think it should. Yeah, I would like it to come back. If it comes back, I will be celebrating that new record high with them, because S&P 500 is making record highs. The Dow Jones is also trying to look. The German DAX is making some record highs. So basically, the majority of the indices have been making record highs for the month. But I liked the Nasdaq. That the Nasdaq has been somewhat struggling. I've seen Facebook started making some record highs. Amazon has not broken the record high. So I'm monitoring. You see how hectic we are. We even monitor each of the major stocks within the US Tech 100 themselves, because we trade them. So they are definitely knocking the same resistance of the Nasdaq 100. The majority of them, the big stocks of the big techs, have been having that resistance. Amazon struggled. Google broke it. Facebook broke it last week. So they could just have a small pullback. Some of the lower end stock of the US Tech 100 could be the one pulling back the USD 100. I'm believing so. I will definitely go long around 13,140 with the 560 pip stop loss. What is the basis? Whenever I buy a shoulder, I don't do risk like that. Whenever I go long on the shoulder, rather on the neckline retest, my stop loss is always on the shoulder. I don't take stop loss in between neckline and shoulder line, because I know that once the shoulder line is broken, the price will break the head, and once it breaks the head, then it's going to be making equal head to the downside. So when I buy the neckline, my stop loss is on the shoulder. That's how safe I am. If the price can get back in between the neckline and the shoulder, I'm able to get out at the retest of the neckline with minimal loss, or sometimes no loss at all. What am I saying? So this is for me a better market to trade, because this one is bullish and I'm buying the neckline. If the price would make a mistake and go to the downside, it will not reach here first, before it can go back to the neckline and come here. So I'm able to see once it joins my risk zone, I will then let it go up and then get out of the trade there. I may not take a sell, but I will definitely get out of the trade. Invalidation. Then if it goes down, it will go down up to the head, go back to the shoulder. Then the market will be rallying. And as I said, it will be making the same amount of money of the head and shoulder pattern to the downside. And if I can tell you right now, it's going to be going back to this level. That's why we've got equal head right at that level. That's what I'm talking about. So in this case, we're buying the 13140 and I'm expecting to be making record highs right there. That's the Nasdaq for me. So where will the target be? The target is clearly just above the resistance. We're going to 14. It will make record highs. Let's just put it as psychological 15,000 points. Nasdaq is right now at 13. It could make about 2,000 points, bouncing from the 13.3 levels or 13 levels and going and make a nice psychological 15,000 points. As I always teach, the price uses psychological levels, indices, and psychological levels. 5, 10, 15, 20, just like that. So we're going to be making 15 psychological level, bounce back to the 13 levels, go to the 20, depending on the number of waves. So that's how it is. I hope that you guys understand. That's exactly where, just excuse me just a moment. So in that case, then we're hoping that I hope you guys understand that is exactly what I've brought to you. Not too many charts, but just 3 charts. Nothing too fancy today. Simple, nice 3 charts. Look at it. The risk is pretty small for you to maneuver. Again, as we like to say, make sure that your entry points are good. Do not catch the signal on the way. If you do not, once you are late on entries, your risk is increased. So we cannot be responsible. One of the things that makes traders to not do well is that they catch signals when they are gone. Once we are halfway or a 30% or 30% on the way of signals, that 30% from our entry is your exposure. So that's why it's very important that you must get the market at the right levels. Our entry is linked to our stop loss is linked to our entry, not when you catch it on the way. When you catch it on the way, you have increased the risk and you have reduced the reward. That's how it works. Also, because we also look at the indicators. So I would leave it there for now. Use your discretion to trade the markets with us. But that's what I'm bringing to you tonight. I'm hoping that you guys will have a good and a wonderful time in the market. I will now be taking questions. I will leave the chat showing on